This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on December 16th, 2011. Our time is 8:39 in the morning Mountain. That's 10:39 Eastern. The radio show runs on 630 CHED in Edmonton, also AM 640 in Toronto. If you ever miss a radio show, you can catch us online. The shows are archived at HESradio.com, also Harold's website, rarecoloreddiamonds.com. Next week, Christmas Eve, we will be on the air. Our show will be on the air 7 a.m. on 630 CHED. So next Saturday, 7 a.m., we will be on, so do not miss that show. And we will be on the following weekend as well. Keep that in mind. We will not miss a show. If you do miss a show, go to Harold's website, HESradio.com, HESradio.com. This is 1 week after all the volatility that we have seen in the market that you want to get our free weekly newsletter. It's a must-read. Last week's newsletter was unbelievable. This week, we have put together more information. As you're probably wondering what the heck is going on, it's in the newsletter. We're going to talk about it throughout the show, but we can't get to it all. Get your name on the list for the free weekly newsletter we send out via email. Every Friday, we send it out. If you'd like to receive it, call us at 1-866-623-2002, 1-866-623-2002. And Harold, it was a very, very volatile week, but I think we're at that point in the bull market, and we've talked about this in the past. You're going to see a lot of volatility, and it's going to separate the traders from the investors. And I remember saying years and years and years ago, John Embry had been quoted on the Canadian Business Channel as saying so much money could have been made in the precious metals markets in the 70s if people would have just stayed in, bought and held instead of going in and out, in and out. And those that buy and hold and are investors will continue to do well going forward because, let's face it, the fundamentals have not changed. Maybe the technical damage is there right now, but with what's going on in the world, you look what's happening, and it's all based on fear. And fear a lot of times is running the markets. There's no rationality behind it. So you have to take even some of the fundamentals at times into question, and the technical side as well. It's just a crazy time based on fear, which is not a great way to invest. As you were saying to me before the show, don't run on emotion.
You better believe it, Randy. That's 100% true. You want to trade on emotion or deal in emotion, not with emotion. You want to definitely deal in logic. And I know that's difficult to do at times, especially when the markets are as volatile as they are this week. There's danger everywhere. Are you kidding? You've got countries in Europe going bankrupt. The U.S. is in horrible shape. China's in terrible shape. Read reports on China this week that are absolutely frightening. They're at 10% inflation, and the real estate market is in shambles. You got problems in the Middle East. Everything seems to be hitting at once. It's like a domino effect, but we really need to keep our heads about us because, again, logic will prevail. And really, as you just said, Randy, nothing has really changed except the situation has gotten more and more severe and a little bit more confusing. So let's see if we can basically make it a little bit more clear so everybody understands what's going on at this point and what we really need to do without getting emotional about it. First of all, gold traded under $1,600 this week, and it broke the 200-day moving average, which for a trader, that's a big deal. It shows that the market's going to go lower over the short term. Silver broke under $30, also broke its 200-day moving average, and basically that market could fall a little bit further. The oil market, which has been extremely strong and trading right at around 100, is trading right now at around $95 with very, very heavy support in the oil market at 85. The U.S. dollar is the culprit. As we presented at the seminar in Edmonton, all the moves that are in the metals markets at this point are primarily dictated by what's happening with the U.S. dollar. And we showed at the seminar that once the U.S. dollar goes up above the 80-cent level, you're going to see the metals sell off. And that's exactly what happened. You know, everybody talks about manipulation and things happening with the world banks and the central banks and everybody selling off. It's pretty simple. As soon as the U.S. dollar goes up, gold goes down. If you look at when this bull market started back in 2000, 2001, the U.S. dollar was at 126 and gold was at 250 and silver was at $3.80. when gold hit 1900 and silver hit $50, the U.S. dollar was at 72.5 cents. So again, as the U.S. dollar goes over this particular time, so will gold, and that's exactly what's going on right now, because the situation short term in Europe appears to be taking the limelight. And as the euro continues to fall, and don't forget the euro was at 160 before, and now it's at 129, 130. So, the euro is breaking down, and that's primarily because the short-term situations in Europe seem to take precedence over what's happening in the U.S. at this point. Don't think that the situation in the U.S. is getting any better. It's not. The situation is dire in the U.S. and is going to continue to get worse because really nothing is being done to correct the situation. So all in all, as the euro continues to fall, at least over the short term, the U.S. dollar will continue to rally. Why it's the reserve currency is a total mystery. But the fact is that we've been through these situations before, and it's very similar to what happened in 2008 and 2009. So at this particular point, you've got gold trading under $1,600. The 200-day moving average has been breached. It shows me that the low in gold that the market could possibly go to is about $1,450. The silver market, once it broke below 30, there's very heavy support at 28, 25, and don't let this scare you, but $20 silver is not impossible at this particular point. There's been several times when gold and silver and other commodities and stocks have broken the 200-day moving average. It doesn't mean that the market is finished, like Gartman is saying, who like a chicken runs out of the market. The fact is that we've seen this before. In 2008, gold went from $1,000 to $700 and then came back and made brand new highs and ultimately went to $1,900. The silver market was at 20, it dropped all the way down to $9, then came back and made new highs at 50. So a similar situation happened in 2008 and 2009, and we're not that far off from that 2008 situation. The feeling in the market is fairly similar. And if you remember at that point, the Dow dropped from 14,000 down to 6,500. Oil dropped from 150 down to 30. So again, during that particular move on the downside, we had very similar market conditions, but gold, silver came right back and made brand new highs. So again, the 200-day moving average is only a short-term indicator for futures traders. And we've always said we're not futures traders. We're buy and hold. We buy the market for the right reason and hold on to it because the trend is still intact. And the reason that you want to own gold and silver and diamonds and assets like that is because of upcoming inflation. And there's absolutely no doubt that we have to have inflation because of high oil prices, high food prices, and weak dollars all over the place. The U.S. dollar, even though it's gone up at this point, is still only at 80 cents. It's a ridiculously inept and weak currency, which will go substantially lower as situations happen within the United States, which is upcoming. So again, there's no reason to panic, and if you are leveraging your positions, again, you're going to have issues because the markets are extremely volatile, but as much as they drop down, that's as much as we expect them to go up. So all in all, again, I'm still extremely bullish on the markets in gold, silver, diamonds, anything to do with that. I'm very bullish on commodities, and the fact is that if you're trading gold and silver and buying in and out and in and out, ultimately you're going to miss this bull market and you're going to ultimately lose your money. What you want to do is own the actual metal, like we've been saying for 10 years now. Don't be trading in and out of the market. I've owned my gold and silver for 10 years now and have never sold a single thing. And I won't because, number one, you need an insurance policy about what's going on in the world economy at this point, and gold and silver and diamonds, hard assets like that, are your hedge against inflation and these massive world problems. What's happening in Europe at this time is extreme. You've got 6 or 7 countries on the verge of bankruptcy. They're more than likely going to be off the euro within the next few months and possibly going back to their old currency, which is extremely inflationary. And basically the people of Greece and France and Spain and Portugal and Italy that are in this type of trouble right now they're in the euro, and the euro is still trading at 130. In actual fact, the euro is stronger than the U.S. dollar still. But the bottom line is is that when they have to revert back to the lira and their other currencies, it's going to be at a greatly reduced level, and that's extremely inflationary. It means that their dollar is worth less and less and less, especially when they come off the euro or get kicked out of the euro, because financially they're not suitable anymore. So as it looks, the euro is a doomed currency. It means that the Germany will probably go back on the Deutschmark, and Italy will go back on the lira, but the fact is that they will not be strong enough, and certainly not be as strong as the euro was, and it's going to cause issues within their countries, because these countries are bankrupt, and by going back on their own currency, the only way out of this is for them to print money. And I know that we say this every week, but that's their only way. They're bankrupt. They have no income or not enough to meet expenses. Unemployment is rampant, and soon there's going to be rioting and civil unrest in those countries because basically their social services will get cut off. So these are the most dangerous times that we could ever see. We cannot make light of the fact that we're heading into the most dangerous financial times that we've ever seen, in 2012 is looking to be as bad as 2008 was. And we went through 2008 and we saw what happened, and the only bailout and the only way that we got out of 2008 was because the Federal Reserve printed so much money and bailed out certain companies and banks. Well, now we've got countries being bailed out, for mammoth amounts of money, and there just isn't enough money in the world to basically bail out these countries. So you're going to see them go back on their own currency. It's going to be a major big deal. The inflation level is going to be astronomical. You've heard of, inflation reaching Zimbabwe type of inflation numbers, 1,000%. I doubt that that's going to happen, but, to see inflation in the 10, 15, 20, 25% range, I believe is coming. And the only markets that will respond to that are the assets that we've recommended to you, which are gold and silver and diamonds. So the fact is that these pullbacks in the market we've seen before. We've seen many of them. And again, you can blame them on anything you want, but as we presented at our seminar, which again is available on DVD, we were just cleaning it up and making presentable, the fact is that we've been through this in 2008. And we recovered from 2008, and gold and silver, even though they pulled back, came back to make mammoth moves. And again, gold went to 1,900, and silver ended up going up to 50. The other situation is that oil is volatile now because, again, with these markets falling, anything that has any value to it gets sold for profit taking because they have to meet margin calls. It's not that these stock traders are trading $1 worth of stock for $1 worth of money. They're not doing that. They're trading $40 worth of stock for $1 worth of money, and when the market falls like it's doing, the fact is that they have margin calls, and they have to meet these margin calls, and they only have a short period of time in which to do it, and so they sell anything that has value. So this volatility in the market will continue. It will continue on the downside, and then it will continue on the upside, and we're going to come back, and we're going to see new highs in precious metals, and I don't have any doubt that that's going to happen over the next year. The other situation that we really need to be concerned about is something that we've reported for last month that has not been in the mainstream media as much as it should, but it was a collapse of MF Global. Why is that important? MF Global, first of all, was a major commodity brokerage firm. And again, the Commodity Futures Trading Commission, the CFTC, is to look over these firms. They're the federal government. They're supposed to go in and do audits on these firms and know, because they are protecting people's money, or at least that's the job that they're supposed to do. But with MF Global, what happened is that the CEO was trading on his own behalf for the company, and he got involved in the sovereign debt situation in Europe and went the wrong way and absolutely annihilated all of the accounts, lost all the company's money. But the fact is that there are segregated accounts. Segregated accounts are where clients' funds go. They're sacred. You cannot touch those accounts. It's the same as investing in real estate and closing on a real estate deal with your lawyer and putting your money into escrow. That money is untouchable. And if you do touch that money, it's jail time. And basically what MF Global did is they raided the segregated accounts of all of their customers and took $1.2 billion worth of segregated funds out of the marketplace. And now nobody can find it. Now those funds are supposed to be guaranteed by the exchange, which is the Chicago Mercantile Exchange, which is the largest commodity exchange in the world. And now they're saying that they're not going to cover it. So all these people that trusted the exchange, that put their money in these segregated accounts with the belief that it was 100% protected are now out their money. It's the same as if you put your money in the bank, and the FDIC in the United States, as an example, guarantees individual bank accounts up to $250,000. If all of a sudden a bank went under and the people lost their money and the FDIC did not guarantee that money, there would be a run on the banking system that defied description, and nobody would keep their money in the bank anymore. Well, that's the situation that's going on now in Chicago. The fact is that these segregated funds have been raided, the money is nowhere to be found, and nobody's anteing up and paying back the investors, which is what the Chicago Mercantile Exchange has to do. But they either don't have the money or they're just not doing it. Why is this important? For two major reasons. Number one of the other reasons why you're seeing commodities sell off at this point is the unwinding of positions from MF Global that had to be released back into the market because there's now no margin money to cover it. The other thing is that who would have any confidence whatsoever in the commodity markets anymore when this has gone on, when, number one, these segregated accounts have been raided and the exchanges are not standing up and doing the right thing and putting the money back into the investor's account. So you've got that situation going on in Chicago and in the U.S., which to me is a major big deal. One of the major reasons why the commodity markets came down this week was because of unwinding of positions from MF Global. So again, that may have pushed the markets down short term, but it doesn't change the fundamentals of the market. And what we really need to know is that gold and silver react to what the U.S. dollar is doing. And we know that the U.S. dollar is a doomed currency. It's just a little bit in a better situation at this point than the euro is. There is no doubt in my mind that certain things are going to happen in 2012. We will see the U.S. dollar come down again because of quantitative easing 3, which is going to happen in March. So again, we may have to fight these markets for a couple months, but all in all, the U.S. economy has got to get back on track, and the only way that that's going to happen is by putting more money back into the system. And the fact is, when they do that, that's extremely inflationary. The same situation is going to happen in Europe. They're going to have to print new money to put money back into these countries to get them back on their feet, and that's extremely inflationary. So with all the confusing situations going on, and there are several of them, we need to focus on what is going to make our investments still strong and determine if that's still a viable situation. And as far as I can see, I've seen a little bit of short-term damage because gold and silver broke those 200-day moving averages. But again, we've been through that many times before, and the market has always recovered because we have massive inflation coming, and we have extremely weak currencies coming, and I give it a 75% chance of a war in the Middle East before the first half of the year is over in 2012, which will cause oil prices to go to over $200. So again, prepare for this. The fact that the market fell down, it could fall further. We could see 28, we could see 25, or we could even see $20 in silver, and this market would still be in a bull market and go higher. We could literally see gold come down to $14.50. It wouldn't shock me and it wouldn't bother me if that happened. All I would do at that point there is buy more of it, because myself personally, I'm 100% convinced that we're heading to the highest inflation we have ever seen, and it's obvious by what's happening in China right now, which China has got 10% inflation. India's got inflation. U.S. has got inflation, but they just don't own up to it. So the fact is that you want to own gold, silver, and diamonds primarily because of what's coming in the foreseeable near future, and that is massive inflation at a level that we have never, ever seen before. Let's not lose sight of how dangerous these times are. We cannot afford to take our eye off the ball. We need to be sharp. We need to be in charge of our own investments, and we have to make our own decisions. And basically, we need to be very cautious. It is not unusual during these times to keep money in cash, to keep your investments partially in cash. As we said at the investment seminar that we did in Edmonton, 60% cash, 40% gold and diamonds. That's where your money should be at this point. I would be 100% out of the stock markets and paper assets because, again, I see another 2008, 2009 coming. And, again, this pullback in metals we saw back then, but then they came back and made brand new highs. That's exactly what I see happening again.
There's only one company that Harold recommends you use when it comes to investing in precious metals. That is Worldwide Precious Metals. The telephone number 1-866-623-2002. Their website, www.pmc.com. If you'd like to receive our free weekly newsletter, they send it out via email free of charge every week. Get your name on the list. And Worldwide has lowered their costs. 5% buy commission is reduced to 2% for the rest of the year. Silver currently on sale, they believe, and for a limited time until the end of this year, you can get involved in the market, start your own precious metals investment account, and obviously pay less commission or add to your position and pay less commission. This week, it is a must-read, the newsletter, and we have lots of good information for you. As Harold touched on, Dennis Gartman, it almost seemed like he was not in the news, so he needed to say something to get himself in the news this week. He is a trader. You've seen him on all the different financial channels. He came out and said that he believed that gold was in a bear market. It was interesting because Goldcore out of Ireland had an interesting comment regarding that. Dennis Gartman's short-term call on gold and silver have been wrong more often than not in recent years. He tends to turn bearish after gold has already experienced a correction and is close to bottoming. Those wishing to diversify and add gold to their portfolio will use his call as a contrarian signal that we may be getting close to a low in this most recent sell-off. Our advice is to ignore Dennis Gartman. Price predictions and noise up and down and focus on the real fundamentals driving the gold market. Having an allocation to and owning physical gold will protect you and preserve your wealth in 2012. If you read our newsletter, go through the newsletter, you are going to see that there are so many people bullish. So get your name on the list for our free weekly newsletter. Speak with Worldwide. Call them at 1-866-623-2002. You can sign up via the website, wwpmc.com. Some other people speaking this week, some of the other quotes that were quite interesting. I should mention Citigroup came out and predicted gold at $3,400 in the next 2 years, with a potential move to $6,000. Also, Rob McEwen, one of the top mining executives in the world, still standing pat at $5,000 gold. Also, Julian Guerin, quoted in Bloomberg, he is with UBS, saying that gold will average $2,050 next year. And he's actually very, very bullish. Jim Cramer said gold is still up nicely for the year. Don't forget, gold plummeted, then rallied in 2008, 2009, and you had to keep buying. Also, Goldcore was quoted as saying traders, hedge funds, proprietary desks of banks, and more speculative players, many of whom are driven by technicals and momentum rather than fundamentals, have been selling gold and going to cash due to the risk of a monetary and systemic crisis. Also quoted this week, Greg Hunter said, and this is important, gold should be looked at as insurance. Selling your physical gold now would be like driving your car or living in your home without an insurance policy. And James Turk said, all of us are facing some difficult times in the weeks and months ahead as the global financial bust plays itself out, but trying to contend with this fallout without owning physical gold and silver is like going into a war without any bullets. And that is very, very accurate. Have that insurance policy in your portfolio. Make sure the gun is loaded. To invest in precious metals, 1-866-623-2002. The website, wwpmc.com. Speak to them about their lowered commissions until the end of the year. HSFineAuctions.com had an amazing sale last Monday. It was a good week for diamonds. We'll talk about it as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on December 16th, 2011. Our time is 9:05. That is Mountain, 11:05 Eastern. The radio show runs on AM 640 in Toronto, 630 CHED in Edmonton. Next week in Edmonton, we will be on the air. Christmas Eve at 7 a.m. on CHED. Christmas Eve, 7 a.m. on CHED. Our show will run. If you ever miss a radio show, the shows are archived at HESradio.com, also on Harold's website, rarecoloreddiamonds.com, rarecoloreddiamonds.com. this week, last week's newsletter as well, must reads. If you didn't get this week's or last week's newsletter, we can send it out to you via email free of charge. Speak with Worldwide Precious Metals. Their telephone number, 1-866-623-2002. If you're trying to understand the volatility and what's going on in all the markets, get our weekly newsletter. We put it together in a way you can go through it in about 15 minutes, or you can spend hours. It's your choice, but we do it in a way that it's very easy to understand and read, and in bite-sized pieces, so you can go through it very quickly, because we know you're very, very busy. The website is wwpmc.com, telephone number 1-866-623-2002, and speak with Worldwide about their lowered commissions from now until the end of the year if you're starting a precious metals investment account or adding to your precious metals investment account. And it was a fantastic week for diamonds. Harold's website is rarecoloreddiamonds.com, rarecoloreddiamonds.com. Before I get to our featured diamond, the big news, and we have that story in the newsletter, this time a different version from Bloomberg. Bain & Company did a report, and they said diamond prices are poised to rise as demand grows at double the pace of supply through 2012. I found a different version of the story. It was in last week's newsletter. We have a Bloomberg version of the story in this week's newsletter. It is a must-read for those investing in diamonds or looking at it. But the big news this week, Elizabeth Taylor's incredible jewelry collection sold for a record-breaking $116 million. On the first night of the sale, the actress's jewelry sold for $116 million, a world record for a private jewelry collection sold at auction. And the famed Elizabeth Taylor diamond, and I think that used to be called the Burton Taylor diamond, they must have changed the name at some point, sold for $8.8 million. The 33.19 carat ring, a gift from Richard Burton, was originally estimated to go for $2.5 to $3.5 million. It went for, that's right, $8.8 million.
Wow.
The money is actually all the money, the proceeds going to the Elizabeth Taylor Foundation. Our featured diamond of the week. Go to rarecoloreddiamonds.com, click on featured diamond. You can see the video there. Harold's website, the only website out there with diamonds and the video to go along with them. This week's diamond is a 1.52 carat cushion cut fancy intense yellow internally flawless diamond. Yellow diamonds have had a great year at auction. We know that from past auction results. With more price appreciation to come in the years ahead, you should look at adding a yellow to your portfolio collection today. And it's so important that you look at yellow diamonds. I remember Harold talking about yellow diamonds years ago, before they really took off. So those that are positioned in yellow diamonds must be ecstatic. It's been a very, very good year, Harold, for not only yellow diamonds, pink diamonds, but colored diamonds in general. But yellow diamonds really seem to have caught people's imagination here in 2011.
You bet, Randy, and we've been able to catch them at the really low prices. Red diamonds are $2.5 million a carat. So basically, they're out of the reach of most people. And again, there's so few of them available. But again, when you look at supply and demand, the fact is that there's maybe 100 to 120 yellow flawless diamonds available for the entire world. And we actually have most of those, of the extremely high quality ones. And basically, those go to our Canadian clients. So yes, we've been buying these diamonds for many, many years now, and the prices go up by 25% a year. But I'll tell you, it's never been busier now because of the confusion in the dangerous markets all around the world. And one of the smartest investments you could possibly make is to put away a colored diamond. A yellow flawless or an argyle pink is the way to go, because they respond to inflation and supply and demand. First of all, with the yellow diamonds, as Randy reported, there's going to be a huge increase in the price of diamonds because of supply and demand. Demand is extremely high and supplies are very, very low. And with yellow flawless diamonds, there's so few of them available. Just think maybe 100 to 120 for the entire globe, and 80% of those go to our Canadian clients. These diamonds go up by 25% a year, every year at least. They've never, ever dropped in price because there's so few of them available. You could never flood the market with yellow flawless diamonds because, again, there's hardly any of them available. But the fact is that they go up by 25% a year, in any market condition. So that means they double in price every 4 years. So my clients that have bought yellow flawless diamonds before this fiasco of what's happening in Europe and the U.S., we bought them for retirement. You buy a diamond for $20,000, in 4 years it's worth $40,000, in 8 years it's worth $80,000. It's done that for the last 35 years. So basically you want to own these diamonds for safety and for retirement purposes. However, the exciting thing about owning a yellow flawless diamond is that in 1979 and 80, when we had high inflation, that was the asset that went up 500% those 2 years, outperformed pretty well every single marketplace, and they've never ever dropped in price, so there's no risk to them. With the world economy the way that it is, with countries going bankrupt, currencies in big trouble, with what's happening in Europe is so dangerous and frightening, you see the markets all over the place. One day the stock market's up 400, the next day it's down 400 or 500. You got gold up, you got gold down, you've got all the commodities going crazy, you got MF Global wreaking havoc on the markets because they stole, all this money from clients and all that. But this never happens in the diamond market. It doesn't trade on exchanges, so there's no volatility in the market. It is what it is. You buy a quality diamond, you're going to do well with it down the road. If you're buying diamonds and going to sell it in a year, don't even bother. It's not even worthwhile for you to do because you won't make any money, and it defeats the purpose of what we want to do here. We're expecting extremely high inflation among the likes that we have never ever seen before. And diamonds, colored diamonds, respond to inflation better than almost any other asset. So my clients that are owning diamonds own them for safety and for profit, but again, we're talking about probably the safest asset you could be at this point. The other thing is, with the uncertainty in the world markets and not knowing what currency is going to be here or when a currency is going to rise or plummet, the fact is that our colored diamond could be sold in Japan for yens, China for wons, England for pounds. It's the only asset that could do that. So again, realizing how dangerous things are, you really need to own an asset like this. And you'd be smart to get out of the paper asset markets like stocks, because the fact is that you don't invest in stock markets in countries that are on the verge of major trouble, and most mutual funds trade U.S. stocks. You don't want to be in those markets at this point. Maybe 5-6 years down the road when the markets straighten out, it'll be a viable investment again, but now it's one of the most dangerous places you could put your money. What we're saying is to keep money in cash, gold, silver, and especially rare colored diamonds at this point, because they don't trade like commodities do or stocks do, so the potential for the market to drop is just not there. There's only a few of them available a year. So we recommend yellow flawless diamonds. They start at about $18,000 to $20,000 for a beautiful yellow flawless. We only carry the top colors, fancy yellow, fancy intense, and fancy vivid. And again, we carry 80%, or I actually sell 80% of the top diamonds in the world. Now, if you were to put 100 yellow diamonds on the table, you would literally be able to pick my diamonds out of the bunch. All of our diamonds are 8s, 9s, and 10s, and whatever we don't take goes to our competitors. So it's important that you understand diamonds and who you're buying through before you make an investment. We're also the only company that can resell your diamonds for you, as we have our own auction business. We've held 2 auctions over the last month. Both have been extremely successful, and we've made history in those auctions because we've actually sold and resold diamonds on a live real-time auction website, which is hsfineauctions.com. It's taken over 2 years to build this site and several hundreds of thousands of dollars to get this done. But those that have participated have enjoyed it and have actually bought diamonds at phenomenal value. The people that have sold their diamonds have been extremely happy because they made profits on them. So, again, we're the only company that has the wherewithal to resell your diamonds for you. And because I guarantee every item that is sold on my website, hsfineauctions.com, I will not sell other dealers' diamonds. So if you are dealing with other people, be cognizant of the fact that they may not be able to sell those diamonds for you. In the meantime, we've put a lot of money and expertise into building H. Siegel Fine Auctions, and we built it to create a secondary market for my clients to be able to sell their diamonds and high-end collectibles down the road. So again, we will announce when the next auction is coming. It will be around the middle of January, but we will tell you the exact date. But again, yellow flawless diamonds. They respond to inflation better than almost any other investment. The fact is that they're portable private wealth. They could be sold in other currencies. Probably one of the most important assets you could ever own at this particular time. If you go to my website, rarecoloreddiamonds.com, rarecoloreddiamonds.com, and you go to the loose diamond section, and you go to the yellow diamonds, you'll see fancy yellow, fancy intense yellow, and fancy vivid yellow. If you click on those, you'll be able to see videos of our diamonds. These are the most amazing diamonds you've ever seen, and of extremely high value, and they have track records. They actually trade extremely strong during times of high inflation, and what I believe is going to happen is that they will keep interest rates low in the U.S. for the next 2 years, try to recover the economy. But then inflation will be so rampant that we'll see in year 3, 4, and 5 extremely high inflation, and a diamond that you could buy today for $20,000 could easily be a $100,000 diamond within the next 5 years. So it's not a matter that we have to hold these diamonds forever. 5 years will do extremely well in these yellow flawlesses if I'm correct about inflation, and I'm pretty sure that we're going to see inflation like we've never seen before that will actually rival what we saw in 79 and 80. So again, go to the website, look at our videos on rarecoloreddiamonds.com, and look at our yellow flawless diamonds. They start at about $18,000 to $20,000, and again, we anticipate a 400% to 500% return over the next 5 years on those diamonds, and we have the wherewithal to sell those diamonds for you when the time is right to do so. The other diamonds that you definitely want to own are Argyle pink diamonds. Argyle pink diamonds are a phenomenon. They come from the Argyle mine, the largest producing diamond mine in the world, but like everything else, the mine is coming to an end. They've exhausted the mine over the years. It's been producing 30 million carats a year for the last since 1985, and now the diamond mine is coming to a close. They're trying to keep it open till 2018. Which is only 6 years from now. However, every indication is that the mine may close earlier than that, possibly a couple years earlier, which is only 4 years away. Give it 2 years for these pink diamonds to run out, and you're talking about diamonds that could increase by 8 to 10 times what you're paying today. So again, we love the Argyle pink diamonds. They're amongst my favorites. They also go up by about 25% a year. However, certain diamonds, like vivid pink Argyles, have been doubling almost within a year to a year and a half because of a tremendous shortage in those markets. So again, the diamond market is on fire. It's so important to own an asset that is portable and private that you can keep in your pocket and start all over again if you needed to. You know, the fact is that we're going to head into the most dangerous year that we have probably ever seen. 2008 was extremely dangerous, and we almost saw a total collapse of the world financial system when Lehman went out of business. We're now very close to seeing a similar situation in the United States and in Europe, which will affect all of us all around the world because all the banks are intertwined and they all deal with each other, and the derivatives markets are extremely dangerous. So again, you need to own an asset that you could literally start over again if you needed to. And again, with what happened in 2008, and now what happened, as I talked before, with MF Global, where they could basically take away any credibility in these financial markets. I mean, in all reality, why in the world would anybody put their money in the commodity markets knowing that the segregated funds can be raided and stolen? Why would anybody really put their money in the stock markets when guys like Bernie Madoff have stole $65 billion and the SEC has done nothing about it? These are times when people are doing desperate things for desperate measures, and again, we need to look after ourselves. We can't depend on the government to do anything for us because the governments are the worst culprits. They're the biggest liars of all because, again, they've got the most to lose. So primarily, they're trying to hold things together, and I'm primarily talking the U.S. and European governments. And the fact is that the lying that's been going on and the stealing of money is just unconscionable. So we really need to look out for ourselves. We're just small investors. You know, I highly doubt that Warren Buffett or Bill Gates is listening to our radio show. We're hard-working Canadians that are just trying to do the right thing. to put our money away and to try to protect ourselves against these markets that are so out of control. And what we need to do is be extremely conservative. I'm recommending for the short term, till we can see how things work out, that 60% of your money should be in cash. Even though you're not going to make any return on it, you're not going to lose your money. And I think you can see the benefits of that at this point. The other thing is you want to have 40% of your money in gold and diamonds. Diamond market is going to protect you against any of these situations that could take away your money. And again, we still feel that the gold and silver markets are going to come back and make new highs, and actually 2012 could be an amazing year. After March, you could see these markets come back and make tremendous moves in gold and silver. But I'm very strongly suggesting getting out of paper assets. Again, you don't invest in mutual funds when countries are going bankrupt. And you don't invest in the stocks of those countries when they're on the verge of bankruptcy, and that's what's happening in the U.S. and in Europe. You need to own a diamond. Get out of your paper assets. Keep some in stocks. Some in cash, some in gold and silver, and definitely get yourself a diamond for protection. It could literally save your financial life. Again, it's an insurance policy against extremely high inflation, and if you don't have an insurance policy against inflation, it's going to eat up all of your capital. So, strongest recommendations: cash, hard assets, gold, silver, diamonds. We'll get through these difficult times, and we'll be in that 90%. As we always said, 90% of the money is made by 10% of the people, and all Randy and I care about is that our Canadian clients come out of this doing well.
RareColorDiamonds.com is the website to take a look at Harold's diamonds. Featured Diamond of the Week. Speak with Harold about that yellow diamond, 1.52 carat cushion cut, fancy intense yellow internally flawless diamond. RareColorDiamonds.com, and go to the featured diamond section. Also, if you haven't had an opportunity, go to hsfineauctions.com, hsfineauctions.com, and take a look at Harold's auction website. And I believe the catalog from the last sale is still up. You can see some of the items that were auctioned off, and it was a fantastic sale. To invest in precious metals, the telephone number, 1-866-623-2002, 1-866-623-2002, the website, wwpmc.com, wwpmc.com. Sure, there are lots of different ways now to invest in precious metals, but give Worldwide the opportunity to earn your business. Worldwide has lowered their commissions. 5% by commission is reduced to 2% for the rest of the year. They believe precious metals are on sale, and for a limited time until now, and now until the end of the year, you can take the opportunity to start your own precious metals investment account or add to your precious metals investment account and do it at a lower commission. Some of the events of the week, and we are into very, very serious times. Most economists expect another global recession. So acute are the risk that few economists are now willing to bet heavily against another global recession in 2012. That story in our newsletter. Also, the International Monetary Fund's Christine Lagarde saying the European crisis is escalating, and basically going on to say that this needs to be a global shared event to stop it from escalating. BlackRock hedge fund saying that the euro area is headed for a full-fledged recession. Kyle Bass, one of the top hedge fund managers out there, saying that the only way out for Europe is to break up, the EU to break up. He said that what they did last Friday produced a blank piece of paper on which there are no details, causing him to conclude it won't work. He also said Europe could face run on banks. He was interviewed on the Canadian Business Channel, also on CNBC and Bloomberg. We have those videos in our newsletter. He actually believes that, and he's been a top fund manager for quite some time, he believes that we could see defaults within 3 years. He said Greek, Portuguese, and Spanish debtors will withdraw money from banks in the coming months. And that's what we saw this week. Latvians withdrew, transferred, and were paid out about $328.5 million from local Swedbank AB from the bank and automatic tellers on December 11 and 12 on speculation customers would not be able to access their funds. Clients withdrew about 10% of total deposits. Supposedly, it started on Twitter. And now here we go again. $1.6 billion is missing. A bankrupt Baltic bank, Vladimir Antonov, and he is 36 years old. He was running a bank in Lithuania and Latvia. There is $1.6 billion missing. He is currently being held, and there is an investigation being undertaken right now. But you have Latvians withdrawing Monday. Kyle Bass saying we could have a run on banks over in Europe. It's a very, very serious time, Harold, and I agree with you. It's a time to be very, very cautious.
You bet. If people are pulling their money out of the banks, again, and burying them in the backyard or in their mattress type of thing, you know it's an extreme situation. It almost happened in 2008. That's exactly what was happening here and in England when Lehman went under, and if it wasn't for the FDIC raising the bank insurance to $250,000, we would have seen about $4.5 trillion taken out of the money market. The fact is that nothing has really been done in order to change the banking system at this point. Again, it's a domino effect that will continue to hurt. So all in all, again, if that's happening in Europe, it's going to happen throughout Europe, and it is going to cause a panic. And again, we're heading into a very, very dangerous time. I cannot explain enough how important it is to be very conservative and very, very cautious. I would definitely have some money in gold and silver. I would definitely have money put away in diamonds. It could literally save your financial life, and keep some cash on hand, because again, cash can be king, and you can always change cash into another investment if the situation is important. But right now, things are so confusing and so dangerous. I think the recipe for success is cash, gold, silver, and diamonds. We're going to get through these difficult times. There is no way that we're not going to have massive inflation going forward, and you need to be in the markets and the assets that will protect you against inflation.
One of the big shocking stories that maybe most people might not have heard of this week, but it was interesting. The National Association of Realtors in the United States said, we have overcounted home sales for 5 years. That's right. They overcounted home sales for 5 years. Data on sales of previously owned homes from 2007 through October of this year will be revised downward next week because of double counting. You heard correct. This is the skullduggery. That's why we've said for a long time, don't believe the inflation numbers coming out of the U.S. government. Don't believe a lot of what the numbers are telling us, because they are not solid, to say the least. Last night on Fox News, they had a debate for the Republican candidates who are going to be running against Barack Obama. One of them will get the nomination. And one of the key things that they talked about was Iran. And on the geopolitical front, obviously it's very embarrassing for the United States, but they lost a drone. And now the Iranians have that drone. And here you have the United States, the president, asking, pretty please, can we have it back? Which is pretty embarrassing, Harold, to say the least. But one of the things that really came out of that debate, and even in the stories that we have this week, is that it seems that Iran is close to having a nuclear bomb. And it seems as well that the United States and Israel don't want to allow that to happen. And I think in 2012, Harold, we have about 2 minutes left here, in 2012, that potentially could be another thing that comes to a head, because I can't see the United States and Israel allowing the Iranians to have a nuclear bomb.
I agree with you 100%. Iran is already practicing how to shut down the Strait of Hormuz, which is something that, again, I've certainly talked about an awful lot. What will happen this time, I believe, is that the U.S. warships will be coming in through the Persian Gulf and trying to stop that from happening. That's why I'm saying that there's a 75% chance that we're going to have a war in the Middle East before the first half of 2012 is over. We've got to be very, very cautious. Oil prices will skyrocket. It will cause major problems worldwide in an economy that can't afford this right now. So, again, be prepared for that, because there's an excellent chance that's going to happen. That's why we say have oil, gold, silver, diamonds, and cash. You're going to get through these difficult times, and again, you'll be far ahead of people that are not going that route. So, again, it's time to be cautious and invest in alternative investments, because, again, different times like we're in right now take different types of investing, and that's what we're proposing to our listeners.
Thank you very much, Harold Siegel, for your knowledge for another week.
It is my pleasure, Randy. I wish everybody a wonderful weekend and a very, very profitable day.
One of the great quotes as we close the show here in our newsletter this week from Tom Asprey. Those who are frightened by news out of Europe and dump their gold this week could soon wind up being sorry. A known seasonal period of strength for the metal is right around the corner. Now is the time to invest in precious metals. If you believe the bottom is in, speak with Worldwide. They have lowered their commissions to start a precious metals investment account from 5 to 2%, or to add to an account. Their telephone number 1-866-623-2002, website www.pmc.com. And two of the other quotes that are so important that we mentioned earlier, James Turk saying, all of us are facing some difficult times in the weeks and months ahead as the global financial bust plays out. But not owning physical gold and silver is like going into a war without bullets. And Greg Hunter said as well, gold should be looked at as insurance. Selling your physical gold now would be like driving your car or living in a home without an insurance policy. You need that insurance policy with the crazy financial and volatility that we're seeing in the world today. 1-866-623-2002 to invest in precious metals, www.pmc.com. Connect with Harold at rarecoloreddiamonds.com, or the telephone number to speak with Harold about diamonds, 1-800-432-1022. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.